Hello and welcome to episode number 22 of 11FS Spotlight. My name is David Brear, and in this weekly show, we shine a bit of a spotlight on the best and the brightest in the tech and financial services industry to try and understand what gets them going, growing, and what they really think the future of the industry will look like. Just before we get going on this, I wanted to kind of let you guys know that actually it's going to be our first virtual event of 2021, the After Dark for Open Finance. We're going to be trying to figure out whether it is fact or whether it is fantasy. And I mean, obviously, open finance is a pretty new concept, but what opportunities, what risks does it really bring to the industry? We can find out really a little bit more about that, find out a little bit more about open finance as we try and bust some of the biggest myths with our After Dark event. If you can join us, it's on the 17th of March. You can register now for one of those free spots. It's a bit.ly link. If you head over to bit.ly/After Dark Open Finance, that's bit.ly/After Dark Open Finance. It's definitely going to be a lot of fun, as the last few digital After Darks have been. So jump on that and get involved. All right, on today's Spotlight, I'm absolutely delighted to be joined by Elliot Goyhkman, who is the founder of Zelf. How are you doing today, Elliot? It's been a little bit of a while since we last chatted.
Hey, David, thank you very much for inviting me. Yes, it's been close to 1.5 years since the last time we met.
It is. It's amazing how fast time flies when you're having fun / in lockdown, isn't it? But all right, what we're going to be doing today is to talk a little bit about what the pitfalls and opportunities are when building a fintech startup specifically focused at Gen Z in the way that Zelf is. Obviously, always as a part of this in terms of what we're trying to do, a big part of this show is getting your involvement. So if you've got any questions, you've got any comments, or you want to get involved in the show, just drop them into the sidebar and we'll weave those conversations into giving Elliot a bit more of a grilling as we go as well. So, I mean, Elliot, as you said, it was actually sort of June 2019, which is terrifying. The last time we caught up face to face, at least, back actually in the 11FS old offices in Devonshire Square. I mean, at that stage, you were bootstrapping for the launch by licensing your technology white labeled under the name Likebank. A lot's happened since then, though. It's amazing what you could achieve in 2 years' time. So bring us up to speed. What's happened since then?
So since we built this meeting as sort of the little lessons learned, I think one of the first lessons that we learned from building a neobank, we realized that not a lot of people are able to understand when you're demonstrating them a prototype of a neobank, because a lot of investors want to immediately try it. They want to actually use it as a payment device, but when you do not have the underlying license or the bank as a service platform, you are basically just demonstrating a proof of concept, an idea, sometimes maybe a very well technologically executed one. But we realized that it was hard to just get investors going with the platform that we built and with the concept of issuing cards and making payments in messengers. And we'll probably come back to the concept later. But what we realized at that point of time is that we should license our technology to some other bank to really battle test the technology, at the same time get the money for white labeling our tech to them, and use the proceeds to actually launch our own neobank.
Yeah, I mean, that's a great model. There's a lot of different organizations that have done something similar to that, and actually, if you can create the opportunity to have a brand that uses your technology, that shows people how good it is, but then gives you the opportunity to then license that off to other people. I mean, look at Oak North. Like, Oak North are definitely one of the most profitable, challenger banks, albeit that they do predominantly lending. And actually, that's exactly what they do, right? They're killing it here in the UK, but actually they're licensing their products to challenger community banks over in the US, or much further afield as well. So how did that go then? How did that transition happen? And I mean, where did you get the sort of inspiration to make that change? Because obviously that's a big change to make to your organization.
Of course, I would say that it was always the concept of actually building our own neobank or our own global financial system was the ultimate goal. And to license the tech, we would actually run counter that concept, because when you really become a technology provider, you become a consulting company, you start actually worrying about handling requests of other financial organizations, of other banks that become your customers. And what ends up happening, you start building features that are important for them, or that are considered to be important for them. And you end up not really building up your technology, but really becoming a service provider. And you start worrying about the billing hours, what rate we're billing, how fast we can throw enough bodies on a given project. And we never wanted to do that. We wanted to really compete with the big players like PayPal, like WeChat Pay, and really create the globally inclusive system, rather than to really get money in the short term. And also, when you're a technology provider, rather than a brand with a loyal following, you're always replicatable. So that's actually the advice number 2 that I would give to people, that when you're considering becoming like a white label provider, the technology itself is replicatable. People can always reverse engineer and duplicate what you've done. So it's just a matter of time and resources.
Definitely, it's an interesting, and it's a sort of a constant swimming against the stream in that sense, as you say. And is that the sort of key change to move to Zelf then? Because obviously, and we can talk a little bit more about Zelf in a second, but that move that allows you to create a community around what you're doing. It allows you to really pull together on that group, and actually, as you say, the best moat is always a product that people love. And actually, if you can get your customers to a place where they're really loving what you're doing and engaging with what you're doing, then that actually gives your sustains and creates a whole business around it. So tell us a little bit more about Zelf then. What's the aim with it? And you said instant money for messages. So actually, I'd love to unpack that a little bit more as well.
Right. So let's start with the concept of money in messengers, or instant money in messengers. What we realized when we were doing the research of the unbanked groups and underbanked, and also we realized that there is a lot of there is a lot of intersection with the Gen Z, because Gen Z, being the youngest age group, at the same time the ones that actually are starting to spend more. Because they're young, oftentimes they're unbanked, just because they haven't gotten their banking account yet. They also don't have any stereotypes about what banking should be. But they are people who are born with internet. They are born with devices in their hands, and sometimes those could be the hand-me-down devices from their parents, or cheaper phones that parents got them, or they bought them themselves. So because of that, we understood that there is a little bit of a technology gap in what people can even install on their phones. And because of that, we said, can we do the appless approach without a downloading of the app? And we realized that at that point of time, when we were starting out, it was like 2018, and I visited you a year later in 2019, that a lot of messengers started to open up their API. We were actually one of the first financial services company that actually got an API integration with WhatsApp. When we were starting out, there was only Viber and Telegram that had their API available. And we realized that we are able to integrate into the same app that people already use every day. And the instant part of the instant money in the messenger comes from the fact that people can get the card instantly online, the virtual card, which then they can add to Apple Pay, Google Pay, Samsung Pay, etc. And they're able to top it up either by IBAN transfer, or by topping it up P2P from one card to another, and they instantly receive the funds, and they're instantly able to spend it. So that was the instant aspect coming from the app that they already use the most.
I mean, that's fascinating, because I mean, we talked a lot of I know me and you talked about this a couple of years ago, but embedded finance is such a massive move in this, and actually the things that people want to do. I sort of was talking to somebody earlier on this week about this, which is, if you can take your solution and put it as close as humanly possible towards where the problem actually is for people, then you're going to be more successful. You mentioned PayPal, but PayPal and Klarna, this is why they've been so successful, right? Be at the POS, avoid people having to do something else, then they will use your product. So, and actually from a Gen Z perspective, proliferation of different sort of messaging capability. It is not just sort of getting into WhatsApp. It's all of these different weird and wonderful places that you talk to, different communities, to engage with friends groups and family groups. So payments just being something you do in the conversation, do in the background of those things, makes a massive deal of sense to me in terms of how that works. So I mean, how do you go about targeting Gen Z? Everybody's terrified of these people that they don't really sort of understand, and as you say, the digitally enabled is not really saying enough. As you say, they are born into digital and are fundamentally digital. So what is the sort of differences that you've seen in terms of trying to create a financial services capability for them?
So first of all, I'll come back for a second with the previous point that you made. What we're doing, we're actually making the finance contextual, because when you gave the example of the communities, families, etc., oftentimes all the exchanges of money, they actually have a precursor of a discussion in the instant messenger. So if your kid is asking you for money, they're most likely texting you on one of the instant messengers. If you are discussing a project with a freelancer, most likely it will also happen on one of the instant messengers. The email is really the second or third best when it comes to communication. So what we've done, we're actually closing the loop of those conversations, and we are bringing the exchange of the money where actually the exchange of the money is discussed. So to answer your question, how about how we go about bringing people onto the platform, we're using the same mechanism of actually in old marketing speak, they would call it member get member, but we're relying on actually one Gen Zer explaining the other how it works, how to do the transfer, how you need to initiate your first dialogue with the chatbot, explaining various features. And I think that from also those discussion comes the big part of the community support that we built. And I think that Gen Z generation, and I'm probably maybe jumping the subject, but for example, we have a huge and thriving community in Discord. We have done it by choice because this is one of the preferred community management tools for gamers. And we're using that to actually provide the support. And a lot of support is provided by the community themselves. So we don't need to actually staff an army of full-time supporters, but actually people being a part of the movement are actually willing to do it themselves. And they are our advisors, our ambassadors, and they're actually the ones doing a lot of promotion for us.
That's fantastic. And actually that, big organizations talk about virality like it's something that you do, on a marketing campaign to get views on a YouTube video. But actually, right, as you say, this is actually, if you create a service and a capability that really fundamentally drives benefit to people, that actually is aimed at them and shaped by them, then actually they will do your marketing for you. It's again, it's not being devious. It's just like great products. People tell other people about them. So, but that's fantastic. I mean, how have you found the difference then of sort of building this product specifically for them? Then have you found, because obviously, I mean, Gen Z is often sort of labeled with being the sort of woke generation. This is the generation that are more aware of the environmental, the societal, the contextual sort of changes because of the environment that they've grown up in. So, I mean, how has that affected, do you think, the ways in which you have to communicate with them, or actually even just fundamentally the services that they need from you?
So I would say that the services that they need from us are really I would say generic, but the financial services, there are financial services no matter where you go. But the important part is being able to send money, receive the money, and the rest is more or less bells and whistles. But I think for Gen Z, one of the important thing is what you really stand for, and what your overall mission, how are you able to communicate with the target audience? How open and honest are you about your setbacks? For example, some of the things that we had setbacks in the launch schedule. We wanted to roll out to more countries last year, but because of the coronavirus and the problems that caused for some of our banking partners, we were not able to go as fast as we wanted. So I would say that the biggest difference would be the advertising through the word of mouth, and where the virality was coming from. What we decided early on, that we'll try to limit our advertising budget, and we'll try to funnel as much of our marketing budget toward the really the referrals and member invitations, rather than to pay to sort of the middleman. And that, I think, goes a long way for Gen Z, because they understand this is what they're doing differently. This is how they're reducing their cost. This is why they're able to deliver those rates to us, because they cut out middlemen in this area. They are not building apps. They're not delivering plastic cards. And that is also part of our mission, to actually reduce our footprint in terms of the emission, in terms of the CO2, and this resonates really well with what you were talking about the really the brand image. Because when there are brands coming to the market that they're saying we'll do the reforestation for the fraction of the payments that you are making, and we'll make cards out of wood, I have a really hard time believing that it's really viable in terms of business, not just a marketing ploy. What we've done, we actually eliminated plastic altogether, and we went all digital and virtual in order to reduce actually the carbon footprint, to reduce the number of envelopes that we need to print and deliver. And that also helps our bottom line, and we are able to actually give more bonuses and greater features to our customers.
I mean, it's really interesting. And as you say, I think a lot of people are still in the mindset that when people talk about Gen Z, this is, people's, the customers you want, kids. And it's just not that. We're talking about a generation that has, literally 40% of the spending power that's happening, globally now. So that is an amazingly huge base, huge target audience that are coming online with such a really different level of need. Obviously, something I should say as well is congratulations on the raise. You guys have just raised $2 million, I understand.
Yes.
What does this do for your organization? Because that must be you've done such an amazing job of getting so far with what you've achieved now. And as you say, I think when we talked before, the diagram of where you are and where success is, the squiggles you'll need to go through to get to here, right? But there must have been a nice big bottle of champagne opened when you managed to get the funding done. Absolutely,
there were actually several bottles, because we had to do it remotely in a Zoom, so everybody had their own. But just kidding, we did get together with the team to celebrate such a great occasion. And I'm really thankful to our investors, because I always draw a parallel with the great rocket that actually needs the fuel to actually fly anywhere. So I'm really grateful to them that they share a vision and that they power our engines. Important to note that we have over 500,000 of card pre-orders right now. It means that 500,000 people in the world from over 100 countries really embrace the concept of Zelf. They really like where we are heading. They like the functionality that we're delivering, and because of that, what we need at this point of time, we need to really scale to more countries. We need to continue building functionality for the self-employed, for the micro businesses, and we'll talk about like invoicing and basically the gig economy that we are going to power for Gen Z. And we were really thankful to 3VC, to CDEX, to Hardyaka, to Chris Adelsbach, to Yair Goldfinger. He was actually one of the original inventors of ICQ, one of the first instant messengers ever. Amazing. Well, and actually, when you bring people together with that pedigree, it's not just about the
not just about the money from an investment perspective, but it's the shaping that they can do and the help that they can give you in terms of making the business successful, right?
Right, absolutely. I mean, they're visionaries in their own right. They have seen a lot of businesses. When we talk about messenger banking, I mean, this concept was floated around for probably many years. I mean, a lot of people have seen what WeChat Pay has done and wanted to replicate it, but there were technological difficulties in assembling such solution. There were security issues that people would have to wrangle with, and we feel that we are the first ones who have successfully done it.
And with that, a number of signups as well in terms of the user base, that'll actually only further increase the potential, as you say, for member get member, and that number's getting bigger and bigger. There's an interesting sort of question actually on the comments. I mean, what would be your protection in this market, do you think, in terms of what stops a Monzo or a Revolut sort of pushing into your market a little bit in an attempt to sort of move into this more embedded banking sense? Because obviously their capability has very much been our app, our capability, come to us to do this thing. But do you worry about the moat you can create around this idea?
First of all, I think that the speed and agility of our delivery is our moat. We have definitely seen that question even coming from the investors themselves in terms of like what prohibits, let's say, Revolut from doing that. And and for example, recently I think N26 announced that they will be delivering to their customers ability to issue a virtual card, which is really one step in the direction which we're going, which helps them reduce their cost and really replicates just like one small piece of the puzzle that we have built. The thing is that the problem that they're facing, that they already have their operational processes, they already have all of their compliance documents, their apps built up. They have already teams of the programmers supporting iOS application, Android application, internet banking site. So for them, they wouldn't be able to just fire those people and say, okay, we're pivoting into Elliot's idea, and now we are doing everything in the messenger. So whatever they would do right now, it would be an additional cost to them. Yes, there would be some savings, but they wouldn't be able to really recoup all the investment that they have done. And also, I don't think their investors would support such a drastic pivot. So for them, it would be an additional cost. It will be a huge learning curve of actually building on messenger-based platforms. It would be a question of what functionality they're actually delivering to their customer. And we're not worried at all. So their math is already not really adding up, and to hire additional programmers and additional really platform, because they would have to support the existing ones, would further compound their problems.
Definitely, yeah, I can see that, and it's interesting, isn't it? We sort of get into the conversations quite frequently with people about the next generation of financial services not just being faster horses, right? So there definitely is a risk that actually the challenger banks, in the way that they've established what they're doing, is just slightly better banking. It's not really digital banking, it's just slightly better banking. It might be more cost effective, there might be a little bit less people, less paper in the process, but it's the same sort of thing, just manifested itself in a fully digital environment rather than a hybrid digitized environment. Whereas Absolutely. These leaps that happen then take financial services into a very different place. But I guess as I'm sure there are people from banks watching this, and Elliot, obviously this is something
Hi.
you've been embedded into developing a product for Gen Z, but it's obvious, really, I guess, in terms of the from listening to you talk, that function is no longer good enough. This isn't just a collection of features. This is as you've referred to a few times, this is a movement or a belief in a better way of financial services. So, I mean, how would you, I'm sure your answer would be, I wouldn't, because I really want to scale but what would be your advice, I guess, to big organizations who are really trying to understand this next generation of opportunity? Because I'm sure when I said the 40% of spending power, a lot of people were like, we need to take this seriously now. Right. So what would be your advice for people to get this market?
I think this is an excellent question, because I saw a lot of attitude, even coming from some investors. Oh, but those are just kids. First of all, they demonstrate lack of understanding of what the age group it really is, because a lot of Gen Z are already part of the workforce. They're earning their own money, and even if they are kids, a lot of spending that goes from their parents is done on their behalf. So even the figures that you were talking about in terms of their spending power, part of the money that their parents, who are probably like Gen X and somewhere in that area, they are spending on behalf of those Gen Zs. So they're actually influencing much more than we can imagine at this point of time. I think one of the important thing is not to treat them like kids, to be with definitely not to have a condescending tone, and not to treat them like inferior or not really understanding customers. I think the attempt to talk to them like that was recently evidenced by the problems the hedge funds had in the battle against the Reddit fans that were supporting GameStop. And I think that idea of like, oh, these guys don't know what they're doing, and they will soon lose money, actually have proven the opposite. So I think that the sincerity is important, the tone of voice, no condescension, and I think that they're young adults, and they're in many ways their EQ is much higher than a lot of people from older generations.
Yeah, I think it's interesting, isn't it? And actually, Avinash, that's a great question about what's the biggest challenge in targeting a Gen Z customer. I think you just answered that really well, Elliot. It's actually talking specifically to them, right? We've sort of had this weird few generations of homogenized, one size fits nobody financial services, and actually we're now at a stage where we can really talk to specific groups of people in the way that those specific groups of people really want to be talked to, and that's a fantastic thing. I did a talk last week actually about like how have we got here, like this beautiful sort of flurry of financial services revolution that we've seen in terms of everything that's come with fintech has been brought about by the opportunities to create competition in the market, and actually that competition puts the choice in the hands of the people who and finally have like real choice of who they use for what and what tools and what capability they use. So now that you have choice, well, you actually have to really talk to people in the way that they want to be talked to and understand them in the way that they want to be understood, because if not, they've got the option to go and work with somebody else and use their products. So I mean, it is amazing, and again, I really I'm so it's so amazing to have seen this journey and the pivots that have happened and the successes in the changes. So again, congratulations on the funding. Congratulations on the customer acquisition as well. That's an amazing figure to have got to in such a short period of time. I feel like it's probably the tip of the iceberg in terms of really where you're going to go with this, which is amazing. So congratulations with the success of it.
Thank you very much. Thank you. Really appreciate it.
No problem. I'm afraid we're going to have to wrap up there, though. I know. I'm pretty sure, Elliot, you're going to have a meeting too. I know I've got a meeting to go get onto now as well. So everybody who's listening, thank you very much for jumping on this. But it is the end of the show. Thank you so much, Elliot, for joining me. Where can people learn a little bit more about you and everything that you're doing for those great Gen Zs?
I think to really try the product for they can go to zelf.co, so zelf.co. But to speak to me personally, I think the best way to connect to me on LinkedIn. So Elliot Goyhkman, find me on LinkedIn. And David, thank you very much for having me on the show. Really appreciate it.
No problem at all. That's all we have for you this week, but make sure you follow 11FS on LinkedIn so you'll never miss an episode like this. Spotlight will be back next Thursday as well. And then again, if you want to sign up for After Dark tickets, I think there's something like 750, 800 of them already gone. It's going to be an amazing show. So come get involved. I cannot remember the bit.ly link, else I would tell you it, but head over to the 11FS website. It's going to be promoted all over the 11FS Twitter as well. Have a great weekend, everybody. Look forward to speaking to you again next week. Goodbye.
Bye.